Hey there, folks. Happy Saturday to you. Hope you're having a fantastic Saturday, fantastic weekend. Coming at you live with this week's market wrap and stocks to watch video for next week. I don't have enough individual stocks to do a separate video that I'm going to be watching next week. So I'm just going to go ahead and combine the two. But there is an awful lot to talk about. First thing is, I could not have been more wrong about my bullish sentiment last weekend. You know, technically, there were a lot of things that I loved about the way the market was setting up heading into the week. Unfortunately, what I didn't do or didn't take into consideration was some of the fundamental things that would have an impact on the markets. For example, the fact that OPEC did not cut production and falling oil prices, I didn't recognize how much of an impact that was going to have on the indexes. The other thing that I didn't take into consideration is the middle of December is typically the time most individuals and hedge funds do their tax loss selling. The other thing that I couldn't have foreseen was this blow up in high yield bonds. So there were a lot of things. Oh, and the market reaction heading into the potentially the first Fed rate hike in 9 years. All of those things trumped the technical setups that I liked. What we have to look at now is what are we looking at for next week? And as we head into a binary event, right? Well, I have to tell you, even though watching CNBC was like watching a funeral on Friday because of all the negativity that was going on. I mean, there was one individual that mentioned, we could see a 20 to 30% correction in the markets next year. Jim Cramer was extremely negative, very cautious about the high yielders and the markets themselves. It just about, you had Carl Icahn on and suggesting that this was just the beginning and that it was a powder keg ready to explode. The amount of negativity was just unbelievable. Oil apparently is going to zero, which is pretty cool because then we're going to be able to get gas for free. Um, Everything that was just so negative, and we could see that negativity carry over into Monday. We could see it carry over right up into the Fed on Wednesday. And I will tell you this, if the Fed does not raise the rate on Wednesday, and I don't care if it's an eighth of a point or a quarter of a point, if they do not raise the rate, I think they lose all credibility and the market continues to sell off. Now, if the Fed does raise the rate and they attach an extremely conservative, dovish statement to the Fed rate raise, I think the markets are primed to rally into the end of the year. We get that Santa Claus rally, which is typically the last week of December, first week of January. What happens after that is anybody's guess. However, we could set up for a really powerful Santa Claus rally because everyone is so negative. So a couple of things that happened this weekend so far. We got some data out of China that may indicate that their economy is at least stabilizing. I saw on Friday, I saw a brief headline that Congress is going to lift the export oil ban on oil. So there could be a couple of things that could serve as catalysts moving into next week. But let's assume that we're going to be weak heading into Monday. So what we need to try and do, or what I like to try and do, is try and figure out where are going to be our potential areas of support. So, this could play out that we head into the Fed statement, and we are testing some areas of support as we head into that statement. So if we lose 49.05, I'm looking at on the NASDAQ, we could potentially come down and test this 48.25, 48.26 area. And then that could serve as a good bounce area. Let's take a look at Dow Jones Industrial Average. These are ugly candles, okay? But let's keep in mind, I do like, and if you've been following me for a while, you know that I like it when you see this 50 cross above the 100. And we have that. That doesn't mean that we can't have some pullbacks. It's so bearish out there, it's so negative, that if we get any kind of positive stuff going on, that could lead to a really powerful snapback, because everybody's positioning themselves, basically for the apocalypse, it sounds like. Let's take a look at gold and gold miners. So this was pretty interesting. We had a last week was just interesting all the way around. The dollar was somewhat weak, and oil was tanking. The markets were tanking. Really, there was like no place to hide. We could see a move in gold and the miners if things really start to get out of control with this fear of a contagion from the high yield market. Okay, so it's something to at least pay attention to, the gold miners and gold, for a potential trade next week. Let's see, the IBB, which I said last week, we really would need to see the IBB participate for, I think, and break over this trend line up here for it to take the markets to new highs, right? And the IBB is in a pretty critical area right now. It's testing this trend line. If it breaks below it, that could add to more selling pressure. But where are we looking at for potential support? If we do break that level, somewhere around the 300 range, right? If we can break down and we hold 300, I think we're still potentially okay. IWM, this is because of its correlation to the high yield market. So this one can get hit harder if this continues to sell off. We do not have a 50-100 cross, so that makes this this index already questionable to me. We could come down here and collect and basically close this gap at around 110. If we blow past 110, we're likely going to come back down and test these lows around 107, 108. Mid caps, broke below some support right here at 1400, and now we got to try and figure out, well, where could we potentially see some support? And really, the next support area would be in this 1348 range. S&P 500. We broke through resistance on Friday, closed nearly at the low. The next area of support I'm looking at is right here in this 1975 area, which we could head right into that coming into the Fed meeting, which would be a fantastic area to have a good solid bounce. So let's take a look at the SMH, which broke this trend line. So now what I'm looking at with the SMH is potentially come down here and test this 5250 area before we see a bounce. Energy is the energy stocks are heading back down to test the lows in this 59.40 area. Oil has just been decimated every single day, right? And it looks as though, I mean, we broke below these lows that we had in August. At some point, we're going to have I would think, a very powerful snapback. Now, KMI was another thing that happened this week. Kinder Morgan, and I did have KMI for a swing. I am completely out of KMI. I could have traded this better, but they cut their dividend by 75%. That was a big deal for Mr. Kramer this week, and I think you're going to see more companies coming out and cutting their dividend. So, the reaction of that dividend cut actually was fairly decent, right? It had the dividend cut and then it bounced. We may come back down and retest this 1506 area. And I'll tell you, I would be looking to potentially jump back into KMI in the $15 range for another trade. I mean, right now, even with the cut, it's still a 3% yielder. So it is somewhat compelling to me. I understand that a lot of people got burned in this stock, but now is not the time in my mind that you want to be selling it. It's a time that you want to look to be potentially building a position. Not to say that you can't see more downside in the stock. You certainly can, but it's one that's on my radar. Home builders were crushed this week. I mean, really, there wasn't a whole lot of places to hide. Let's look at the transportation, which just got decimated, right? And that's a big deal for some of the Dow theorists, right? I mean, this was a big deal, the Dow transportation. So it broke down. It looks as though it may want to head lower. What was the other thing that I really wanted to... Financials got whacked, and I don't know if any of y'all watch options action, but one of the shorts, I believe, on the options action show was Goldman Sachs. So financials aren't looking all that attractive. There are a lot of sectors that are looking pretty beat up. Retail, not looking all that attractive. Industrials broke down. So look, a lot of weakness out there in the markets, but I will suggest to you that if the Fed raises the rate on Wednesday, that some of this panic may subside and we could see a powerful rally. At least that's the way I'm looking at it as we head into next week. So let's take a look at some stocks that I do have on watch. And I've got a couple of stocks that I was asked to go over in the video by special request, and we'll go ahead and do that. But let's just take a look at what I've got for next week. So FNSR, this one I think reported earnings. It basically closed this gap, right, on the daily, and we could see it potentially follow through. We could see a red to green move in FNSR next week. I mean, this was a pretty big volume day. We may see some continuation and follow through. Like I said, I think this is one you want to have on your radar. Along with FNSR, one that I've played in the past is in the same industry. It's this OCLR. And this OCLR, there's been some insider buying around the 275 range. It was coming up and testing this 360 range. Which is, a little area of resistance. It's had a little bit of a pullback on lower volume. We saw volume pick up a little bit on Friday. We could see this go back up and retest that 361 area. I think it's worth having on the radar, OCLR, along with that FNSR. CETV, I actually missed the breakout on this one. However, it's coming up into a fairly interesting area, and it really, I mean, it has already gone up 3 days in a row, so I wouldn't go chasing this thing. It's coming up into resistance. It may need to pull back a little bit or consolidate. However, there has been a tremendous amount of insider buying in this stock as well, and you all know how I feel about insider buying, right? Especially if it's a significant amount of shares. I mean, 38,000, or how many shares is that? 384,000 shares. That's a lot of shares. That's a significant buy. So I do like this potential, this stock potentially for a break over the 250 mark. Like I said, it might need to consolidate, so this may be one you just need to watch for the next week or so. FLXN, another one, and I think these guys have, oh, you know what, they had an event Saturday, so they have an event today. So I don't know what, I don't know if anything has happened at that event. However, let me take a look at this real quick. Yeah, this is a recent IPO. There has been some insider buying here, right? It's consolidating right below the $20 holla. I love those round number rolls. So, it's a thin float stock. You need to see some real volume in this thing. Don't chase it on a gap up, especially if the overall market is tremendously weak. However, I do think it's one you want to pay attention to for a $20 roll. It could be a nice little setup. That's a big spot, $20 to take out. BBRY, they have earnings next week, and the stock keeps flirting with $8, right? If they can bust through 8 with real conviction, you could get a nice trade out of it. It's a thick stock. It's got a large float, so it takes a lot to move this stock, and it may just consolidate into earnings. So and if earnings beat, I mean, there's a lot of chatter about this Priv, their new phone. If they beat on earnings, this thing could be in play. I think it's worth having on the radar of BBRY. PayPal, which was on my list last week, it started to break out and then failed on Friday. Just couldn't get any follow through. I think part of that had to do with the Walmart announcement as well, that they had their own, mobile app pay system for Walmart. I think that might have contributed to the weakness, but it's still holding up fairly well and could be getting ready to make a move. I'm not as hot on it as I was last week, but it still looks fairly good, and I'm looking for a trend line break over 35 with conviction, and it could potentially be a decent day trade. The stock that I got, one of the stocks that I was asked about to go over was CLDX. Look, if the biotech sector remains weak, this stock is going to be weak as well. Now, where could there be a level of support? We could see some support here right around this $13.78 range. If this breaks, if it breaks below here, we could come back down and test it right into this $12 area. Okay, and then you would want to see it hold as support in that $12 range. So CLDX right now, I mean, it had a beautiful setup going and basically has broken down now. So we need to see where we can find some support. AA actually had a nice trading opportunity last week. It came right up into this trend line and failed. So we're still in a short-term downward trend. I think the best place that you would want to look to get involved with AA is somewhere in the $8 range. If it can pull back into this $8 and hold again as support, that may be a place that you would look to take it. This is a swing trade opportunity. I do not really consider AA a good day trading opportunity because it's such a thick stock. So AA, I think this is the other stock that I was asked to take a look at. I think $8 is your ideal area to buy, and if that can hold as support. And then there are a couple of stocks that I was looking at for snapback plays, and one of them here is this GameStop. You know, GameStop just reported earnings, and I think they were better than people had anticipated. You know, this is a company that has been left for dead, or apparently was going to go bankrupt. I think I've been hearing that for the last couple of years. Came right down to this $30 and bounced, you know, held it a little bit. So look, if we get some more weakness on Monday and Tuesday, this would be one that I would consider to start building a position in for my long-term hold account. Okay, this is not one that I would be taking for a very short-term trade. It's one that I would start building a position in, because I truly believe that the video game sector is hot. It's going to remain hot. You know, Activision and Electronic Arts both pulled back a little bit, but GME is doing much better than people had anticipated. I think they're going to do well over the holiday season. If this thing comes down to $28, ideally, that would be a really good area to get, you know, I would boost my position in the $28 range. So this is one I'm looking for a potential snapback play. It would be a swing or a longer term hold. And then the other one that I'm looking at is Qualcomm. You know, this is another name that has been absolutely decimated. So Qualcomm looks like it might have a bit more to go. It's not completely out of the lower Bollinger Band. Let's take a look at that GME real quick. GME actually just broke through the lower Bollinger Band. So might get another day or two flush. Like I said, that $28 range would be ideal for me to potentially look at dipping my toe. But Qualcomm, let's go back to Qualcomm. Again, this would be more of a long-term positioning, long-term hold than it would be really a swing trade. So what's really compelling to me about this Qualcomm, ideally, let me clear this out a little bit. What I'm looking at here is I'm looking at this trend line, right? I'm looking at this trend line here. We're just about to kiss this trend line. And $44 would really be the ideal place that I would want to try and get involved. Okay, because there's some price support there. There's a trend line support there, a long-term trend line support. I think that this one is fairly compelling. It's had a lot of bad news that has come out on this thing. They've got so much cash on the balance sheet. It's really starting to become an attractive value proposition to me. And that's it. That's all I've got for next week. So listen, we could see some really bad action on Monday and Tuesday. Heading into the Fed, like I said, I think there is a potential for us to have a tremendous snapback rally. We get, if oil bounces because of this lifting of the export ban on oil, that could be a catalyst. We could see some things that, we could just catch a lot of shorts off guard. So potential for a big time rally towards the latter part of next week. Or we could, break new lows or go retest those lows in the markets that we had, what was it, in August or so. So, one other special situation stock that I want to talk about. We briefly talked about it last week. Is Disney. So I was wrong about Disney. I thought Star Wars was coming out last weekend, or this weekend, and it's actually coming out next weekend. So, one of the best stocks that I ever invested in, one of the best investments I ever made, was Marvel Enterprises. I bought Marvel Enterprises when it was coming out of bankruptcy, and one of the things, and I held it for years. So one of the things that I learned about when I held Marvel is when it was coming up to a movie release, oftentimes the stock Marvel would rally into the movie release, and regardless of what the expectations were for the movie, if whatever the box office expectations were, if Marvel crushed it, one of their movies absolutely crushed it, it didn't matter. Almost every time the following Monday, the stock would sell off. Now, I'm not suggesting that Disney's going to do that. Disney broke some key areas of support on Friday pretty convincingly and almost closed at the low of the day. So actually, what I'm looking at with Disney is if it comes down to that 105.23 area for a long-term hold, I may start to dip my toe. Now, and this is what I think could happen with Disney, I think that the expectations are so high for this movie that if they disappoint, the stock could really get hit. And if it does, I mean, we got all the way down to 90 bucks back here, okay? That's a long way to fall. 105 to, we could see it come down and test the 100. Probably going to have a little support there in that $100, round number. And if it breaks below that, then I think maybe you can come back down and test 95 or 90. This is a stock that I want to own for the long haul. And if I can buy it on sale, then I'm going to do so. So you've got a special situation, binary event coming up on Disney. We could see a little bit of strength next week heading into the release of Star Wars. If it does not do as well as everyone has anticipated it will do, the stock could get hit, and I think that would present an opportunity to pick up some shares of a solid company, for the long haul. That's just my take on Disney, and that's it. I've got nothing else. You guys enjoy the rest of your weekend. Let's see what this week brings. It could be a very interesting week. I think there could be some tremendous trading opportunities out there. Good luck. Don't get emotional. Don't freak out. Don't let fear take hold. We'll get through this storm, and once we get through the storm, I think we're going to have some great opportunities. So, all right, enjoy the rest of your weekend, and I will see you all next week.